The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the time that we get to look at the indices in a little bit more detail, but I've got a bunch of questions, so I'm going to try to do that very quickly. Of course, I'm the host of the show, and I'm also the author of the Opening Quarter Daily Newsletter, and very detailed report that goes out every single day. And we are looking at my Traders Corner posts with the charts every day in somewhat detail, because I like to show the Chapman wave methodology that's involved in buying, and when we get stopped out, why it was stopped out, etc. So let's just get to the nitty-gritties. In the Chapman wave methodology, let me go through this very quickly. The core is identify the lowest low bar of a pattern, try to count as many peaks to the upside as possible, label them alphabetically in sequence, A, B, C, D. That's the fourth highest peak at D. Other things can happen to make it go to an E, F, or even a G, but it's at D that we really do the analysis in greater detail. The easy part is done, just getting to D. Now we have to decipher whether or not there's enough strength to go on in a buy mode of the one shorter term that maybe could go to a buy signal in a longer term, and that way you can keep going in sequence. The patterns we look for: straight line up or down, arch formation, cup formation. You can have a combination. So it's just three patterns: straight up, straight down, going from one point, rounding, coming back to that point. Could be a V-shaped pattern or an arch in this case, or it could go from one point down and back again. Or you can get the combo, but the combo is exactly the same thing. Straight line down, arch formation, breaks the left side low, could go even lower. That's what we call the dreaded H, or the Y pattern, which is the positive Y. And that essentially says a break above the left side high in this cup formation would be a very, very big positive. The technicals are confirming. That's also where you could double top and turn around. Let's go to this. So what are we looking at? You've got your big deep cup formation. You had your arch formation that turned into a breakout to the upside, especially with that doji candle right there on the 3rd of June in the Dow. The stochastic, people say that you're using lagging indicators, and for years I've proved that my lagging indicators, if you use them correctly, can be right on the day. The day of the low is the day that we got a buy signal. We remain long, 2 times long the Dow, a position in that, and that's from 24,701, and it was the low 27,820 is where we entered, and we're still long, having taken just a little bit, only for swing traders. Swing traders took a little bit off, somewhere around 26,200. Now we're at 26,622. Chapman wave methodology, what are we looking for? This is clearly, I have no other way to count it, and this is going to completely fail. This says that there should be a move about 26,907. To go a point above that starts leg C, and then you should still get a peak C and then a leg D. And that says we're already in Wednesday. You cannot get a top in this market until early next week. That's the earliest, because unless today you break above 26,907, I don't know what we're going to do to be able to get that. It's going to take a little while. It might take the rest of the week. As long as we don't break below 26,330, which is where the 14-period exponential moving average is, that'll be saying, uh-oh, you've miscounted or done something wrong, because this is failing. But the technicals are suggesting there's enough internal strength to go higher. Not that much higher, but higher. And the weekly chart has got a leg D. You've got your peak G in the 120-minute chart. Let's just get out of that for now. We don't need it. Okay. And the question I've been asked a lot is, what's different about this monthly chart, since it has the look, but maybe not the exact configuration of a head and shoulders? That exact configuration is what you have to. You cannot modify a technique every time something changes. That's form fitting. That just doesn't work. You've got to be very strict with your rules. And my rules here say this is gray leg C, because it's under the previous all-time high, in this case 26,951 in the monthly chart. The MACD still hasn't crossed positive. If it does, that's going to be really positive. Hasn't done it yet. That's why the reason why it's gray is that even though the stochastic's at 81%, technically I should have an up arrow here. I've somehow avoided that. I am going to put it in now because enough time and price has gone on. I just don't know why I haven't done it. This isn't a buy mode. Technically, I should wait until you go to a higher high above 26,951 to change the color to blue instead of gray. Gray says you're under a previous major high. You don't want to until you got the MACD and stochastic confirming. Giving a buy mode signal is a little bit aggressive. I think I can do that right now. So far, this is very good, and you can see this Chapman wave inside track repellent line has been hit a couple of times. Now it's the same analysis for the S&P, not so much for the Qs. So let me just say the S&P right now needs at 29.24. Better not close under 29.03 because that'll say, nah, this could be a single leg up, although it's a leg B. It has the character because the MACD is failing. But so far, the MACD is strong, stochastic strong at 84%. Has turned down from the 96% in 84. That's a big deal. But the weekly chart is really going to be the clue on Friday, where it goes and what it does next week. Meantime, it's only in a leg A to the upside in the monthly chart. Now, if you look at the QQQ, there's a little difference because the Qs have not gone to a new recovery high. They're under the 191.32 all-time high that was made back in April the 28th of this year. Plunges to 169.20. I should say plunges, drops sharply to 169.27. Has a really good rally to the most recent high of just under 190 and trading at 186.33. If this starts to break underneath 183, let's say 186.53 in the next week, that's going to be very poor action. I think it's going to struggle and just barely make it to a kind of a double top in the 191 area. And then we have to reassess to see, is there going to be another pullback of some sort? We'll discuss that. I actually want to just go quickly to gold because gold is saying -2 right now, that so far this is a high-level consolidation. It's acted really well. The technicals are very good. The weekly technicals are very good. And I still believe, even though we long the dollar from April a year ago at 90, and we have taken a little bit of profit on the way up, it had hit 98.37, and that was a recovery high. But the daily and weekly are saying sell mode. The monthly chart is still in a buy mode. So I'm looking at this and saying it just needs more time. Yeah, it could even take more price going to the 95s, not a big deal, as gold completes this move. And then I think gold is going to take quite a bit of a breather. And we'll talk about that. TLT right now is down 58 cents at 132.24. I drew the rectangle. It's in the rectangle. Could hang out. Rectangle formations can last a lot longer than your patience. I do believe this will turn into a peak F top if there is a move in the TLT, Lehman 20-year Treasury Bond Fund, under 130.60. That's going to say to me, yeah, that's an F, and it can't have any other count to it in the daily. And it's leg F in the weekly, and that's going to say if yields start to rally, how long can they rally for? Is it just going to be what I talk about, a high-level consolidation? Will this become a low-level consolidation? And that's all it is, trading at 20.33, 2.03%. That's amazing. But it's been here before, many times before. So I don't think I want to talk about this too much other than to say there could be a bit of a bounce. And crude oil right now is up a little bit. Crude oil is up more, 167. Yeah, right touching the 200 period moving average. Think about that when I get back. Dow's up 73.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. Don't miss the last chance to sign up for the TAS Profile Scanner at just $97 a month. Starting July 1st, we're raising the price to $197 a month. This is your last chance to lock in the $97 rate for as long as you remain a subscriber. And as always, new subscribers get a 30-day money-back guarantee, so there's no risk. Don't miss this last chance to sign up at the low rate of just $97 a month. Sign up for the TAS Profile Scanner today by visiting the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Let me just show you this quickly. This is on the 2-minute chart of gold continuous contract, and I'm a little behind. The real price is down $1.03 right now at 14.17. The 2-minute chart has gone to a peak E and trying to make a cup formation. The 5-minute chart has gone to a peak E and is holding the 14-period moving average, attempting to rally. My thinking here is that the 10-minute is the one that's giving the greatest clues, because it's suggesting, let me just do this again, A, B, C, and that is a D. That it was also, that it's made a D, and that this whole area of 1417 to 1415 is going to be very important throughout the rest of the day. So watch that very closely. If there's a move into the 1420 area, that is really good action. And if there's a sudden slide later on below 1414, it says, uh-oh, a little bit more of a digestive phase in gold. Okay, enough with that. Let's just get on with the story. I want to go alphabetically here. First question I had was Riot. John wanted to know about Riot. Riot is, in fact, in the, there it is, Riot Blockchain Inc., trading at $3.74, up 44 cents. It had closed yesterday at, so it made a low. It's a stock that has been up in the sixes just in April, and then it kind of has a little bit of a pullback to the 241 area. So what, 55%, and then it has a decent run and goes to a peak A, pulls back, and goes to a candle to a higher high yesterday to 356, but it pulls back to 322 and closes at 330. So that's how it was when he sent me the question. What am I looking at? And what exactly was the question? The question was, hi, Basil. Subscriber John had a question about Riot. His email is below, and he CC'd me. Okay. So the question is, Basil, new subscriber, a long-time follower of TFNN. Could you please find a moment to look at this blockchain stock? Riot is the ticker and appears to be in a new Chapman wave leg B up. Correct, and it's extended today. Thank you in advance. John from Annapolis. Oh, I haven't been, years, decades ago, I went to Annapolis. My brother lived in Baltimore just briefly when he was working as a city planner in Baltimore. and drove around Annapolis. Wow, it was really pretty. I can imagine it must have changed by now, but it looked really good. So at 375, I said to him, I like it very much that it was, if it was able to get to I think, didn't I say 368, something like that? That'd be really positive, because it would suggest that the 200-period moving average of $3.06 will become a focus, and that's exactly it. I like it. It's actually starting to produce a Chapman wave squash pattern, which says this is very good action. The weekly chart, let me do this, A, B, C, D, E, made a peak F at that $6, just over $6, and really took a dive, but it held the support in the gap area, and that's good. The gap that was made back in, was that March, I think it was. Yeah, that was the week of the 15th, and then Monday it gaps up. The 248 was the high. All of a sudden, the low of the next week of the 22nd of February is 290, and it folded the other day by going to 241. So that's kind of important for me, because it says we've done a partial corrective measure that fitted exactly the parameters we'd like to look at. So I am looking at this as very positive, and I do think that if you're in the position, I'm going to go into that usual routine. I say keep a core position. A trading position would say just have a trading stop on a position. If you're a little nervous, you've got enough to have a core position. Say you put them into thirds. At this point, I'd say 2/3 should be your core position. 1/3 should be a trading position. And at 378, I'd make a stop on this third, a close below 351. But in the meantime, I'd have some kind of a mental, I wouldn't even put it as a physical trading stop. I'd have a kind of a mental stop that says, 20 cents. Just keep it as a trading stop on a small position. However, if those was with the technicals the way they are, stochastic's only at 65%. If in the next 3 days the stochastic actually goes to 80%, by then it might have touched the 200-period moving average, then I'm going to recommend to you that trading position, 1/3 position, we'll have a look at it again maybe in 2 days' time, but I would say that the trading position, either you do this as it breaks. If it does, 390 is the number. I don't know why I said 306. 390 is the number of the 200-period moving average. If it goes to 391, and you're just thinking, you know what, I don't mind taking some profits that I can put back again later, then that 1/3 position could have a trading stop, a much tighter trading stop of 15 cents. If it does break 390, have it like a 15 cent, and that's the one that you're going to put back somewhere around 364, 362. John, I hope that helps you. That weekly chart is improving. It needs a lot of work to really improve, and the monthly chart doesn't look as good at all. So this is excellent. 5 sessions of really good up move, and that's the way I would trade it right now. Next question I had was telephone. What was the exact question? Sam wants to know, Basil, on your show today, if you could please go over the following. Where is a good buy entry point on AT&T? That's T is the symbol. Or is there a better, different stock purchase for a long-term dividend play for pay? Thank you, Stan. Stan, that's a really great question. It's a question I've been asking, wanting to try to resolve for my subscribers for quite a while. And I'll tell you why. If I go to telephone, look at the volatility. If you're getting this for dividend play, and you were unlucky enough to buy it, say, at 32.25, below the high that was made the week of the 14th of April, well, it dropped to 30. That's 2 points. I don't mind a 2 points drop on a $3 stock, because 10%, given the stop plus the dividend, I'd say 3%. But that's kind of whippy action. But what it has been doing is going to higher highs and higher lows. My biggest concern is that I think the sector is in for some kind of a blow, because there are so many people. I mean, I've done it myself. I've got rid of one part of one service because I just don't need that extra service, the landline service. I just don't need it. So I get it free with one of my other services. I was paying for it. Now I don't have to pay for it all. So I keep whittling away at these bills, because the internet can really add up. Okay, so now I'm looking at peak C1, C2 with an inside C in the daily. And the question here is, if you look at the monthly now, for the first time with this inside rally, I'm getting a sense that if I can hold off for about another 3 to 5 sessions, I'm going to get a much better feeling for how the monthly chart plays out. Because if the monthly chart goes above, doesn't have to close there, just has to go above 3308, and it's at 3260, 3259. So it needs another 50 cents right now, and that monthly chart extends leg A, and that'll be the 1, 2, 3, 4, 5, 6, 6th or 7th month of an up move with a single leg A. And then there should be some kind of a pullback. I would like to talk a little bit more about this as soon as I get back, because it is a lot of people have asked that, and I've asked that question. I'm just afraid that you're going to have capital loss and a dividend gain. I want capital gain and dividend gain. I'll be back as soon as we come back from this great Dows of 72 S&Ps.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I'm going to go right back to that, but I had a question. The person's just in the den for a moment, so I said natural gas, the continuous contract trading at 2.888. Basically, I said natural gas at 2.22 is still in the sell mode in all time frames, but the 120-minute is suggesting that there could be a push to 2.40 if natural gas can just rally by Thursday over 2.31. At that point, the price goes over the daily 14 period. It should be a 14-period exponential moving average for the first time since late May, and is a positive. Look, this is the move. We went to a peak D right here at on the 20th of May, 2.696, pulls back, tries to rally, and that was the last time it was over the black 14-period exponential moving average. It's hit it a couple of times. This is the first time it's hit it where the W formation in the MACD is good and the stochastic W formation is strong, and the V-shaped pattern of the on-balance volume is very good with price. But I need to see it above 14-period moving average. Once it can get to even 2.31, 2.32, I think there's a chance that it's going to have an attempt over the next 4 or 5 days to get to the high of 2.484401 that was made on the 17th of June. But I also said it has to hold, it has to hold the support right here. And I don't think I'd like to see it lower than, it's at 2.28. Well, if it takes out today's low, that's a real problem. Then it's just stuck. All right, 2.25. So if you want to nibble, just start a little nibble here, and I would add to it on the way up, but not too aggressively. I wouldn't get an aggressive position here. Look at the weekly chart, monthly chart. I'm sorry, I broke off because we were looking at telephone. I want you to introduce Verizon. See, Verizon's just made a second peak C that's having a problem. It's had a better looking chart pattern. So the question is, ExxonMobil, you're talking dividend stocks. So I'm going to jump there. ExxonMobil, here again, just it's so whippy. You know, you buy at 65, that's great because it goes all the way to 81. Oh, well, wait a minute, you buy it at 81. Yeah, it goes to 82 or 83. Next thing you know, it's at 72. I want a 3-month period where I'm looking at it where I feel secure that at least for 1 quarter of dividends, you're going to be in a good position. So let me go back to telephone. That was the question. So this is what I'm going to say. The reason why I said I wanted a little bit more time is because you've gotten to a peak D, but there's a high level consolidation in peak D in the weekly, peak C1, C2 in the daily, and it's saying to me at any point at 32.61, if there is a break above 33.45, preferably 33.50, that's going to be really good action. And that to me says you've got a good cushion of about 1.5 points, maybe 2 points. So it's like 7 or 8% risk, but you're getting the dividend. What is the dividend? 3.4. I don't know what it is, but it must be in the threes surely for a telephone company, AT&T, trading 32.62 up 7 cents right now. So what I am looking at, I just wanted a little more time because this rectangle, I don't mind the rectangle staying. In fact, I don't mind if this is at 32, between 30, it's at 32.60 right now. I don't mind in 3 months' time if it's trading at 32 or if it's trading at 33.10, stuck in this range. But I don't want to be saying, yes, buy it here if it's going to break 30 and go down to the 29s and you've just lost 10%, even though you're getting a dividend. So if you forgive me, I'm going to say, John, I need a little time. But and because the reason is I don't want to say nibble. I mean, you're getting a dividend stock. Do you want to get a little tiny bit here for your dividend? That's not the point. If you're going to go in, you're going to put in at least a good position because it's for dividends and it's for, you can never say safety in the market, but it's for what theoretically as a defensive stock should be a fairly safe position. Now, if it's for 6 months, all I can say is that if it's for 6 months, you've got to be prepared for a 10 or 12% pullback, but there's a chance you could be making 8% to the upside because the monthly chart is improving. So I will do this, John. I'll talk about it I might have a little dividend section this weekend. I'll be looking at the Exxons, Chevrons, etc. What really works for dividends, perhaps looking at 3 months. But I am going to say to you, because I would not feel comfortable saying to you, get a good position right now at 32.63, because it's in an inside rectangle formation that says, if it breaks under 32, so 32.63, you can go to 31.61. That's just not a big deal. But in the big spectrum of things, at a peak D in the weekly chart, it could be a longer and deeper pullback. That's my issue. So forgive me for not saying yes. If you had asked me, could I buy an option, the 32.50 call option for 3 months' time? I'd say I'd go with that because you know exactly what you're risking and you could actually make quite a bit of money. But that wasn't your question. You want dividend. I understand that. I will deal with it as I try to often deal with it in my Traders Corner part of my opening call newsletter. So I hope that it doesn't help you, but at least you know where I stand. And I'll be looking at the other dividend type stocks as well. Funnily enough, we actually have a stock today that we got yesterday that is up about 2%, which turns out actually has a dividend, a pretty nice dividend for the price. But this is not the way you want to play it. It is not your question. Next question I had was, so did the natural gas, did Riot, did Telephone and Verizon, OSTK, Overstock, I believe that is, I haven't looked at it for a little while. Overstock, whoa, nice move. It plummets all the way, it goes from 90. It has a little bit of a pullback to 9, just a 90% correction, and then starts peak A, peak B, peak C, and he has a very strong leg D. This might just be in the air. Now, Wayfair, I think here in Boston, I think they're going to have some kind of a protest. Let me just do this. I think the workers are going to have a slowdown or a stoppage or something. So this, maybe that helps Overstock. Overstock.com, trading at 12.28, up $1.52. I wonder if they had earnings or something. Let me just see what it says. News, right here. Check. Okay. Overstock, option alert, calls, $11 calls sweep. Overstock exit from retail is getting back on track. Overstock, NASDAQ, efforts to sell its retail business have intensified. Okay. You know, that's a different story altogether. They're not doing great. They're trying to sell themselves. So the question in the Dan about Overstock, yes, it's a really good move. It's in leg D. No. I in all good conscience, this is a story. I can't say yes because it's a terrible looking chart. Daily chart looks great. If you're looking at $9 to 12, 30% or more rally in the short term, but this is a very risky trade. Etsy, another one, Etsy and Shop. Etsy had a peak D at 71.80, has a big plunge to the downside down at 60.58. That whole sector. So Etsy, and now you've got Shop, Shopify, made a peak E and is pulling back sharply. It's only a peak B in the monthly chart, and a leg G/C, that was weekly, in the monthly is G/C. I'll talk a little bit more about this one when we get back. That is Sharp trading at 288, up 465. Basil Chapman, Dow's up 78, S&P's up 6, almost 7. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, we're back. Shop is what we're looking at. Shopify trading at 288.22, down up 424. It made a peak E in the Chapman wave methodology at 338.94 on the 20th of June. MACD turned down. Stochastics now way down at 50%, when it was, in fact, in the 90% area just a couple of weeks ago. This is a leg B. Absolutely, there's no question that if there's no new high above 338.94, that's going to be 338. It's trading at 288, so that's 20. Oh, man. That's 50 points. I just don't see how it's going to do that. 50 points, am I right? 338, 288. So there's 12. Yep, 40 points. 50 points. Gosh, can't believe it. Anyway, so it's a 288.34. The MACD is still good in the weekly chart. Stochastic still good at 89%. Look at that red line. That's the relative strength index pulling back sharply. And I would just say, so the question is, what about it? And the Chapman wave counts. So all I can say is that looking out, this is very positive. Looking in, shorter term, I would not be surprised if it has to do a little more testing, and that 50-period moving average right there is at 273. So after such a big move in the weekly chart, I would not be surprised. It's testing the 9 right now. 265 is the 14-period exponential moving average. It could do that because this is a rotational, I don't know what we can call it here. A rotational correction is on the downside. And on the way up, we still get rotational corrections, but they're rotational. What's the opposite of a correction? Yeah, it's not a bull. Yeah, it's rotational. High-level consolidation, that's all I can say. We've had that here, and you can see that the FANG stocks are all doing, they're very disappointing, and yet we've had stocks that have been making new all-time highs on our list, either on what we're looking at or what we own. And I just say to you, be specific, stock specific at this point. Also look for the sub areas. In other words, my webinar today, 3 Wednesdays ago, I discussed what we're looking at for my Traders Corner, for our positions, our portfolio, why we're looking at it, and those are the things that are working right now. We bought a stock this morning. It is up from the entry point. It actually had a really nice intraday bounce, so I don't even know if it's going to close positive, but it is in the area of working. And we had another one that we bought yesterday, which is up really very sharply on a percentage basis. And what I like to do for subscribers is I'm not afraid to have, for some people, stocks or indexes or something in the 200, 300, whatever it is, price range. but we could just as easily have something at $3 as we did yesterday, $3.94, and today it hit. It's already at 411. It's hit 415. So think of that as if it had 100. Look, 392. Let's call it 39.20, and intraday it hit 41.50. So it doesn't matter where the zeros are. It's the percentage gain that you really want to be looking at. I do believe we're going to go very selectively in the Dow and the S&P to new all-time highs, and that's going to be important, and it should be in this phase. And if it's going to work, it should be before July the 4th. And then maybe we take a break. I don't know. That's kind of the way the charts are looking. Feeder cattle. I go to LC, which is live cattle. I think that's what we're talking about. Live cattle, continuous contract. This is the first big bounce that we've had in one move. We've had it in a couple of moves off the lows. So this is almost like natural gas. Let me just say, cattle goes with natural gas, doesn't it? Yeah. Tell the Australians about that. Oh, was it sheep? Sorry, sheep goes with natural gas. So yeah, they're different chart patterns. So let me just do this. Live cattle LC at LC is up 2.6 at 105.85, up 2.52%. Now the question: limit up today? Oh, is it limit up already, and therefore it can't move? If it's limit up today, the way that the stochastic and the MACD are acting in the daily chart, and the way the weekly, look at that candle, it's not in engulfing yet. If by tomorrow it can go above 106.47, doesn't have to close, it just has to go above it. That's an engulfing candle from last week, after last week's inverted Chapman wave Roman candle. And that says if you are halfway into that candle on any day, because it's a weekly chart, on any day, if you're above 105.74, and we're at 105.82, there's a really good chance you're going to go to the high end of that candle, which is 106.47, 106.475, continuous live cattle. And that says, yeah, there's a good chance. Now, what do you do? Futures, if this is limit up, the question is, could it go limit up? I actually don't know what limit up is here. In the live cattle. All I can say is it seems to be trading as if it's still trading. So that says it's not yet limit up. I would not be surprised if it goes limit up, and if it opens tomorrow, even gaps up, it doesn't have to be limit up, but if it just gaps up tomorrow, I would take a little bit of whatever you put in now, I just take a little bit off and then put a trading stop if you're able to do that. So yes, I think this is good action. Question I had about wheat. Wheat is actually very nice here. We made a peak D just about 8 days ago. It's pulled back very modestly. Hold the 14-period moving average. Above the 9-period moving average is at 546.5, up 6.5. I love this. This is really good action. It also probably speaks to the dollar weakness. Single leg A up, and it's had every opportunity to pull back in the weekly. Yet now the weekly technicals are improving enough to say, I don't think this will be a single leg A up. It's got tremendous support in the 528-ish area, 528 to 524. And so far, this is very good. Let's see what soybeans. It's the reason why we're in the long position on the fund. Oh, everything slipped because these are continuous contracts, and continuous contracts, the price gets changed. Not the pattern, not the dates, but the price itself gets changed. So the pattern is still made a peak D, holding the 14-period moving average. The 200-period moving average of 936 is at 923.25 right now, down 3.25. That's going to be a resistance, and then it might go above to 944, 948, but I think it's coming back. Soy is holding very well with a high-level consolidation. I'm going to draw in the oval pattern to say it's stuck here for a little while longer, maybe into early next week, and then there might be a break to the upside. So that's that pattern. And corn is trading down $1.25 at 451.68. Yeah, this is after that peak C, which had a characteristic of a peak D, but holding very nicely. It needs to break above. In this case, now the price is 469.75 on the continuous contract, the high of the 17th. You go above that by 1/8. And you're starting leg D. And look at that 200-period moving average. It's like a magnet at 468. It's trying to attract you. So yes, that's acting very nicely. Now, I had to talk about one other thing, if you don't mind. Boom. Gosh, what was it? I'd written it down. Oh, the IYT. Thank you for GT and the Dan. At least GT is sending me emails. That made a peak D and a very sharp pullback in the transportation index. Now it's up 89 cents, but it's not a very good-looking chart. That's the one thing. Well, it's one of the two things that are making me a little nervous and suggesting that when we get to that new high in the down the S&P, the weekly chart's going to suggest a pullback.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
How about three things real quickly? See the E-mini right here? Finally, it made that. It went to a peak C, pulled back quite sharply, still in a buy mode, and then bam, it goes to a doji leg D. So make it real clear, at the end of the day, if the E-mini is above 29.33, that's going to be really good action. And if it goes below 29.25, it says, nah, it had an intraday rally, but it's going to stall. I like what I see so far. That's number one. Number two is a quick question. I have two quick questions. One is, hi, Basil, I haven't heard you talk about the SMH, the lagging indicator lately. What are your thoughts now? Thanks, Victor. Victor, I'll do a lot more tomorrow on this. SMH is having a very good session up 3.54 at 109.03. I showed my subscribers over the weekend a particular chart that said no matter how negative I get about the, we were short, very nicely short, the SMHs, it made a high of 120, 116 is where we were short. We took profits all the way down to the 98 area. It hit 97.61. We were out on the rebound completely to about 105, and now it's trading at 109.01. I have to tell you something. I'm beginning to look at this a little impressively because during the weekend I was asked about the SMHs. I said, well, I'll let you know if we're going to go short again, but it's acting pretty well. And I'm kind of impressed right now. I actually can't give an opinion right now. Not enough time. I'll do it tomorrow. Next thing is, yes, I question about the home builders. I could have spent a whole show on it, but I didn't want to spend something that was lagging and fading. The HGX, I'll do that tomorrow. Remind me, HGX housing we'll talk about. Also that stock that I mentioned yesterday that we got very low priced at $3.94, now trading at $4.16. The day is young. By the end of the day, it could be back to $3.94. But so far, it's over 4% gain in 2 days, 1.5 days, actually. So, okay, that said, I'm handing over to Steve Rhodes, Dave White, Tom O'Brien. Have a wonderful day. Check out my opening call, my daily newsletter, and have a wonderful day. For a change, I'm not going to talk right through the commercial break. Coming up in a moment, and the Dow is up 91. I would love to have a very strong close today for 2 reasons. I'll talk about them tomorrow. Have a wonderful day. Steve Rhodes coming up, and I'll see you tomorrow.